SEBI has barred Finfluencer Mohammed Naziruddin Ansari and 6 more associates of his that operate under the handle of Baap of charts. Ansari is not registered as an investment advisor, but offers stock market courses and investment tips through social media platforms like YouTube, X and Telegram. Additionally, SEBI has also asked Baap of charts to deposit 17 crore rupees in an escrow account until the scrutiny of the Finfluencer is through. Is SEBI walking the talk, or is this the first of many such crackdowns waiting in the wings? Rakesh Khar, thank you so much for joining us on this weekend edition of Business Plus. SEBI crackdown on Finfluencers, SEBI walking the talk. Many more such crackdowns in the offing right now?
I mean, something better than late, than never. This action has happened. I'm sure that it's going to set a precedent for many more who are in this zone to, to correct the course of action. But I believe that, it's a huge catchment area. SEBI has demonstrated its intent to go after them. But I don't think SEBI is yet completely seized of the problem or the canvas that is at hand. Because in the social media domain, Karthik, it's a very, very complex problem to begin with. Let's get deeper into it. First of all, greed is at the core of, an Indian investor. And even if you're not an investor, if you're shown up something that, that promises growth, which is realistic or not realistic, the guy who's looking at it from the growth parameter doesn't get into logic. He goes into emotion. He says that, well, it sounds very exciting, so he goes for it. And then, SEBI, all this while, when the era of influencers really happened over the last 1 decade, I would say, more so post-COVID, when people started watching more and more of content on the social media, did not really wake up to the challenge. And second, very important component to is that Google is very happily calling us the YouTube nation, and this entire Googleization of content comes without any attendant risks and challenges. So anybody, there's no entry barrier. Anyone can start up a YouTube channel, similarly a Telegram service, and do whatever you want to do. So SEBI has been by and large sleeping so far. I'm unfortunately constrained to say so. It's woken up right. Second, social media, very happy with the numbers. It keeps growing every day, and very happy to celebrate India as the destination to be, but not bringing any checks and balances, and greed at the context of it. And it's not for the first time that mis-selling is happening in India. So in that sense, welcome, but I believe that there is need for a concerted and a considered action across verticals who are involved in this entire Finfluencer game. We in media are also responsible. We've been celebrating Finfluencers in our own right. And I don't have an ideological quarrel with any of them going to business using social media as a vehicle. But the qualification, that's the other key parameter.
So, Rakesh, I have a fundamental disagreement here. While I understand that this is hard-earned money being invested in markets by virtue are risky, everybody knows that. And there have been lack of educational options for investors like us, and you've seen much more of the markets than I have. We haven't really seen social media inundated with content from real registered investment advisors. Now the point is, at one level, you could have the social media open to a plethora of registered investment advisors who may or may not be relevant to the youth of the country, and their sort of communication skills and their advertising skills may not be the best in the world, but their brain is obviously in the right place because of the experience and education they have. My fundamental quarrel is influencers of all kinds don't necessarily need to be qualified. And if you leave Finfluencers aside right now, look at travel influencers, look at food influencers. At the end of the day, you're spending your money on somebody who's advertising under the garb of being an influencer, and you're still investing your money. So a travel experience, hey, go to Europe, go to so-and-so location in Spain, eat such and such food, you're listening to an influencer and you're spending money. So in this case, you're still using your money, but investing that money in stock markets and not in experiences.
Fair enough. I think the difference between an influencer and a Finfluencer has to be very nuanced. And here it's a question about your hard-earned money. There it's about an experience.
An experience you buy with hard-earned money.
No, I know, but hard-earned money, there is, your experience, your tour experience will go bad, but up to a certain extent, here your entire money can get evaporated. So I think, there is.
So what should be the fine line? Is it fair to say that as an experienced, maybe not educated, qualified, certified investment advisor, but as an experienced investment advisor stroke Finfluencer, unregistered, I understand, should you be at least allowed to give basics of stock markets, technicalities of stock markets, a macro view on how markets move, education on what is a large cap, what is a small cap, what is a mid cap, which direction historically has moved which index. Is it fair to at least give that information?
Absolutely.
And not stock picking?
Yeah, so I'm completely in agreement with you. There is absolutely great room for education. Now, who has to do that education? If an influencer is doing it, it is at a cost. He has to invest into that platform. He has to host classrooms, virtual classrooms. He has to bring in further domain expertise. I am saying RBI, SEBI, all other stakeholders should have invested in this particular ecosystem on their own. If you look at SEBI's traditional spending in advertising on investor communication or investor education, it's essentially in the print media. Unfortunately, no youngster who is looking at investing in stocks today or is not reading the print media. So there is a wrong or a misdirected trajectory of the spending that is happening from the government side or the official ecosystem in educating investors.
Okay.
Those who are doing it, I'm happy they're doing it. You're right, they need to be qualified. But the remit has to be, so to say, limited, or it needs to have a term and reference. It cannot be about straight away going to saying that you invest 100 rupees with me and then you will get 10,000 rupees over a period of time. That is quarrelsome, that is troublesome.
Right.
And it has been allowed to happen all this while. And I want to take you back into a little bit of history. Mis-selling is happening right at the top. ULIPs. I bought a ULIP, you bought a ULIP. Nobody told us that there is a 40% cutoff right at a shave off right at the top.
Absolutely.
And it took us about 10 years to realize that ULIPs is a scam in that sense.
I lost ULIP. I lost money in ULIP. I wanted to withdraw my money because it wasn't giving me the assured returns, and a registered product bought through a bank or an advisory of a bank. I had to withdraw for an exigency after 3 years, and I lost almost 80% of what I had invested over those 3 years.
So let's clear the haze. Finfluencers who are educated are doing the right job.
Okay, let me try and take some names, or if not names, let me just try and use some attributes. A CA, a popular chartered accountant that uses CA in her handle, perhaps not a registered investment advisor, but has seen enough ups and downs of markets, understands enough ups and downs of markets. As long as she is not telling you which stock to buy or which index to buy or which mutual fund to buy, but is just giving you education to mull over, education, not literal formal education, experience sharing, should that be allowed?
That should be allowed. See, ultimately domain knowledge is what an end consumer is looking at. The way the sectors are changing. I mean, 10 years or 20 years ago, ExxonMobil was the undisputed leader as, in the entire market cap, return on investment. The entire pack is changing. It is moved to IT. Within IT, it is changing face again. So every 10 years, there is a new leader in the business. That is why business cycle is very important. So if someone has that experience, he would be worthwhile to share it with the end consumer. But stop short of pointing out a particular stock.
Okay.
Because however knowledgeable you may be about that stock, the person who is relying on you without actually looking at whether you're qualified or not is not actually empowered to take that decision.
Sure. Let's say Warren Buffett, celebrated investor, celebrated fundamental watcher, gets bullish on 2 stocks in India, 1 stock listed in India. Warren Buffett is not a SEBI registered investment advisor, does a video, compels people or prods people, or people get influenced to buy that stock outside of SEBI's remit. My fundamental question being, how do we prevent people outside the shores of India to act as finfluencers willingly or unwillingly, wittingly or unwittingly?
So Warren Buffett, yes. Because there is an established body of work which has
not
been
a registered SEBI investment advisor.
We live in a borderless world in that sense, So we can't prevent Warren Body's body of work or knowledge, which is well established, from coming to Indian shores and Indian consumers. Nobody should do that. But within the ecosystem, both at the social media level and at the regulatory level and at the government's official level, we need checks and balances.
So, I just want to throw, jog your memory back.
So I don't want to just bash SEBI and, so I think, I want to take you back to early days of television.
Yeah.
I came from traditional business journalism, and we would not put out a story where there is not a quote from that particular company. Okay. Whether it is on their results or there is, early days of guidance, I can tell you. Yeah. Infosys started doing guidance in early 90s, I guess. And you would need a company person who is responsible for the domain. Right. Say the finance head or the logistics head. Now, when television started with all its right, pieces, I'm a part of that journey, you are a part of that journey, started bringing in outside guys.
Yeah.
And over the last 2 decades, they have become like big ticket domain experts without necessarily having knowledge of that company.
Right.
And believe me, 99% of the times, nobody speaks to company. They speak to people tracking those companies.
Right.
And
analysts.
Who are these gentlemen? They are analysts.
Analysts,
so this
researchers,
huge,
data
big
crunchers.
community of analysts, even with the qualification, have become an invested stakeholder or invested party in this case when it comes to determining the trajectory of a particular sector.
Sure. I want to jog your memory to something that Madhvipuri Butch in her much acclaimed, famed meeting with registered investment advisors about 3 weeks ago. And a few very important statements she said, and many of them are coming on our screen right now as we speak. I think there was a question asked by Harsh Rungta, celebrated investment advisor. And Mr. Harsh Rungta, senior Harsh Rungta, asked her a question that if your guidelines are so stringent on everybody who's dealing with an end customer who's investing in the markets directly or indirectly, needs to be a CFP, needs to be a registered SEBI advisor, how do companies staff those people? These examinations are not easy to clear. They require enormous amount of studying. And if an individual invests so much time and effort and money in becoming a qualified investment advisor, he or she might as well start her own firm. So how do organizations which are meant to offer investment advice to end investors staff their organizations? At some point, is there a need for SEBI to even relook at the constitution of investment advisors and grade them as per what level of advice, what size of AUM for an investor are they handling? Because I think one size fits all approach may not work.
I couldn't agree more with you. There is, without being discriminatory, look at the Skill Development Council of India. It started in 2014. They really farmed out skills customized for each particular unit. It's like auto components. Within auto components, there is a separate skill set for two-wheelers.
Right.
There is a separate skill set for four-wheelers.
Right.
And if I draw from the analogy of an IITian and an ITI guy,
right.
I'm not being biased, but both bring a certain skill set on the table. So I think in the investment advisory space, SEBI and all other stakeholders, including social media giants, should look at creating these courses, where you are equipped and trained and there is a certification which is good enough to at least arm someone who wants to share knowledge.
Absolutely.
There can't be a penalty on sharing knowledge.
Absolutely. So I think in this case, it is not yet a penalty, but this deposit by Baap of charts, 17 crore rupees of deposit demanded to go into an escrow account. An escrow account, if I understand right, is an account which will be jointly held by SEBI and Baap of charts. You will need both of them to sign off to withdraw money from that account.
Absolutely.
This 17 crore rupees being deposited in an escrow account, it's a huge sum of money. I don't know how much Baap of charts would have made over its lifetime.
I don't know how they arrived at figure. It's a large piece.
I'm sure they must have
but
done
there would be some bureaucratic intervention there. See, what happens is that if you get the signal from the top that now we want to act, no one from the below in the bureaucracy, unfortunately, nudges the top that there is this grey area, why don't we act?
Right.
Or even if they say the top doesn't act.
Right.
Now that the top has acted, it's an overreach to my mind.
Exactly my point. I mean, 17 crore rupees is a huge sum of money. The penalty or the sort of forthcoming penalty, to my mind, could have been a much softer blow, because at some level, this is going to make the entire influencer community, not just Finfluencer, the entire influencer community, which is also being slapped day in, day out by ASCII guidelines on what is an advertisement, what are the disclaimers you need to carry, what are the hashtags you need to carry, is going to serve as a real detriment to people who want to go out there, make a living off social media. And I feel that if this 17 crore rupees Baap of charts is one among many waiting in the wings to happen, we are really talking about a huge market out there which will be cash strapped. How do they make their living?
Yeah, fair enough, but a correction has to be made. A correction has to be made.
So is this a precedent? Is this a warning for all other influencers out there that, hey, if you don't shut shop, if you don't go and clear your exams and splash your SEBI registered number on your screens, and if you don't tell us how much you are making from which stock.
See, there's a difference between ASCII and a SEBI. SEBI is the watchdog which can actually enforce.
ASCII just gives you guidelines.
So that's the problem with the other. That's where it started.
Right.
Influencers in the traditional domain became big. They driven corporate leverages, and the consumer suffered in certain cases and benefited in certain cases as well.
Right.
So I hope and pray that it's a direction, making one test case, and it does not follow, and there's no vindictiveness in terms of taking this entire positivity out from this area, which has its own shades of grey.
Absolutely. So I think the low-hanging fruit is not the only fruit SEBI should go after. Maybe pluck one low-hanging fruit to set an example of what that tree could eventually give you in terms of fruit.
Redirect its communication to areas where people are consuming that content.
Absolutely right.